Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1292A, and today's date is May 29th, 2017, and the title of the episode is, This Strange Market Anomaly Only Happened Twice Before, and It Didn't End Well. Now, before I get started, I just want to salute all those individuals that who are currently and have been serving in our military. Thank you for your service, and I wanted to take a moment to remember all those people who died while serving in the country's armed forces. Let's take a moment of silence to honor those individuals. Let's get into the economic collapse financial news. Now, as we know, during the last Great Recession, back in 2008, many individuals, they lost their wealth. They lost their homes, they lost their jobs, they lost pretty much everything, and they had to go bankrupt. And there were millions and millions of people. Actually, it was around 6 million people that actually went through the bankruptcy procedure. And now the central bank is out there, and they're hoping that these 6 million that are now coming off of bankruptcy, where they're going to have it removed from their credit scores, they're hoping that they go out and they start borrowing. They hope to start improving their credit to push the economy further down the line. Now, is this really going to happen? I believe these individuals are very cautious at this point in time. They've went through a lot. They lost a lot. And do I think they're going to just run out and start to purchase things? No, I think that's not realistic at this point. Secondly, these individuals aren't making as much as they were before. Many have part-time jobs. Many people have taken what they used to have and now readjusted to what they have today, and I don't think they want to go through what happened before. And I think the central bank is hoping that these individuals take their credit and improve their credit and borrow and apply for credit cards to put it back into the economy. And I don't think this is going to happen. I think this is something that they're hoping for. But we can see right now that the economy, well, it's not improving. It's deteriorating very, very quickly. JP Morgan Chase is out there saying that large parts of the society, well, they're not seeing any growth in income and job opportunities at all, which is absolutely amazing because the unemployment rate is at 4.4%, and they're out there saying that they're not seeing growth in income, which we know that income is continually declining, and they're not seeing job opportunities. So what are they seeing? Why are they saying this? Well, number one, they're saying that there's zombie companies out there, and there's massive rising student debt loads, which means individuals are going to college. They have these massive student debt loads. They can't pay them off, and they can't get a job where they're making enough money to pay off the debt loads. The companies, they're not hiring right now. Many of the companies are in a frozen state where they say, okay, at this point, we're laying off individuals and we're having a hiring freeze where we're not hiring more individuals. They're also seeing that used car prices, well, they're starting to slide. And we're seeing rising delinquencies and subprime defaults, which is not helping the economy at all. We're also seeing declining loan growth, which means that banks, they're not loaning out. Now, we've seen this before. Everything that they're saying, we've discussed before. They're seeing lack of investment, no small business creation, and no earnings growth at all. They admit that large parts of the society, well, there's big trouble here. They're having problems. And if this doesn't change, going down the line, it's going to get worse, which we know it's going to get worse. It's not going to improve at this point. We are heading down a path where things are rapidly accelerating to the downside, which means that the whole thing is going to fall apart. Now, what's very interesting is that we've had many banks, Goldman, we have JP Morgan Chase, Bank of America, and now Citibank. They're out there and they are reporting the same exact warnings. Vulnerabilities from elevated asset positions. And Citibank right now has joined the latest warnings from all the other banks stating that we have a major problem here. And what they're saying is that with our credit colleagues worried about the ECB taper at rich valuations and equity strategists focused on earnings such as divergence may very well happen, but historically is somewhat of an anomaly. How much of an anomaly, they said? Well, the only recent times we've seen such a direction of travel is late cycle in 1999 and 2006. In both episodes, credit essentially signaled that the final equity blowout was occurring. And what they're saying right now is that this is exactly what we're saying. In a simpler way of saying that at the end of the day, any Keynesian system, such as the one we're in, is contingent on debt. Debt creation means the system grows, and debt destruction means economic contraction, recession, deflation, general turmoil. And according to their analysis, this is coming from all these different analysis from analysts from all these different banks, they're saying that we are this close from the debt destruction phase. So we've seen this before, and we know what happens. We saw it in 2006, we saw it in 1999, and we know what happened in 2001, and we know what happened in 2008. Here we are today. And they've been seeing this for quite a while. It just didn't pop up. But now they're just admitting to it. And this warning goes back months. And it's not improving. It's getting worse. And things are rapidly deteriorating. How do we know things are deteriorating? Well, an Australian asset manager from Altair Asset Management made the extraordinary decision to liquidate its Australian share funds and return hundreds of millions of dollars to its clients, citing an impending property market calamity and the overvalued and dangerous time in this cycle. Now, this is coming from Philip Parker, who serves as Altair's chairman and chief investment officer. Giving up management and performance fees and handing back cash from investment managed by us is a seminal decision. However, preserving clients' assets is what all fund managers should put before their own interests. He also said he wanted to make this clear. This is not a winding up of Altair, but a decision to hand back clients' monies out of equities, which I deem to be far too risky at this point. We think that there's too much risk in the market at the moment. We think it's crazy. Now, we are asking, is there any more juice in these companies' valuations? And the answer is absolutely not. Let me tell you, I've never been more certain of anything in my life, Parker said. I am absolutely certain we are in a bubble in this property market. Mortgage fraud is endemic. It's systemic. It's just terrible what's going on. When you've got a 30-year-old who have never seen a property downturn before, borrowing up to 80% to buy 3 or 4 apartments, it's a bubble. We are seeing this in many countries. This is not something that just popped out of nowhere. We're seeing property bubbles, we're seeing stock market bubbles, we're seeing bond bubbles, we're seeing derivative bubbles. We are seeing this all over the place. And for this hedge fund manager to say, okay, you know something? Let's withdraw the funds. Let's give the money back to the individuals because they know something. They know something is about to hit, and they don't want to have all their customers lose all of this money. This is telling us something right off the bat, which tells us that we are headed towards this major crash, which we've seen before. We saw it back in 2008. Now, we know that the stock market continually moves up. The S&P is moving up, and the real estate bubble is inflating while we see the entire system break down around us. And we know that who really created these bubbles? I mean, was it Obama? Was it Bush? Was it Trump? No. It was the central bank. The central bank created the stock market bubble. They created all of this. But the economy right now is slowing down. The Federal Reserve is raising interest rates in a slowing economy. And they've done this before. Back prior to 2008, they raised the rates. Back in the 30s, they raised the rates into a weak economy, which made the economy even weaker, which then crashed the economy. Ron Paul is out there, and he says that the blame for this upcoming crisis should be blamed on the Federal Reserve and not Trump. Now, we know what the central banks do. We know they like to point fingers in other places. And we know that the central banks, they've been controlling the economy. They've been lowering interest rates. They've been pumping stimulus into the market. They've been controlling the market, the stock market, with a push of a button. They've been giving free money out everywhere, not just here in the United States, but across the globe. The ECB's doing the same thing. The Bank of Japan's doing the same exact thing. They've been purchasing the treasury bonds, trying to keep this entire system afloat. And we know that all of this is one gigantic illusion. And when it crashes, they're going to point the finger, most likely at Trump, to say whatever his policies that he was doing, his economic policies, by not approving the TPP, by doing whatever he's doing, he's the one who actually crashed the economy. But we know, because we've been following the economy for a very long time, we've been watching it break down slowly. We've been watching retail, we've been watching housing, corporate defaults, we've been watching every single sector to make sure that we understand what has been happening. It didn't happen yesterday. This is happening over a period of time. And this is one of the reasons why we've been tracking it for so long. I mean, many people are out there saying, well, you've been tracking it for so long and there's been no collapse. The whole point is not to predict the collapse. The whole point is to prepare for the collapse and to track it day by day, week by week, month by month, to understand how they do this so this can never happen again. To call the central bank out on all of this. Because I'm going to tell you right now, most of the people are going to wake up one day when the stock market falls and they're going to say, Trump is the one who did this. The economy was strong before under Obama, and Trump is the one who crashed it. Well, we've been watching this, and we know that it's been breaking down through the time of 2008, all the way up until right now. It was built on an illusion. And we watch retail break down year after year. We watched the housing market break down year after year. We watched how they modified the subprime industry. We'll watch how they modified the credit scores. We watch how they modified the loans and everything else, and how the corporations were buying back the stocks to prop up their companies. We've been watching all of this. This will not be a surprise to any of this, and we will have it on record to say, no, you are wrong. You have not been watching anything. We have the proof that this economy never improved. It was propped up by stimulus. It was propped up by the Fed, who was pushing buttons and controlling the market in the basement of the Fed. They've been using the plunge protection team, the high-frequency traders. And when we look at the entire economy, well, we know what exactly happened. And this is why this was done. So nobody can say, yes, all of a sudden, because of what has happened in the last couple of months, that's what's brought down the economy. Or a country cyber attacked us. That's why the economy fell apart. No, the economy fell apart is because the central banks around the world created this great illusion after the Great Recession, and they printed up as much money as they possibly could. They bought up all the toxic real estate. They told the banks, listen, don't foreclose on the houses. Let the people live in there. We need the prices to rise. We need to create bubbles in 20 different cities. Have hedge funds, investment companies buy up as many houses as possible. Do not sell them. Rent them out if you can. Doesn't matter. Hold them off the market. Blow up these bubbles. And that's exactly what they did. But we know what they did. And we understand that we need to be prepared for what is coming. And that is a total collapse of the system. We already see hedge fund managers already realizing there's a big problem. And they're giving money back to their customers. They know what's going on. They know what's going to hit. So get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.